Hey folks, Dan Frio here with your Mortgage Minute. So I go over YouTube videos all the time, every day. You guys probably watch them too. And half the people are saying the world's basically going to crash and it's Armageddon. And the other half are saying, okay, things are as good as normal. So let's break down, instead of housing, maybe let's break down the economy in general, because the more healthy an economy is, and the more robust and the more wealthy an economy is, well, then that reflects in real estate, especially housing. So let's go through some components that I'm just gathering data from in the last couple days, because we need recent data on what's going on in the markets, such as jobs, the Federal Reserve, debt, inflation. And does all this mean we're in a recession? And then what does a recession mean? So let's get to it. What I want to really break down is the economy in general. The heartbeat of our country is jobs and wages. So the biggest thing you see out there right now in a lot of the videos is a recession's on the horizon. So let's do kind of a math equation here and break down some components that bring us down to equaling, are we in a recession or not? So the components we're going to go over here briefly is jobs, okay, inflation, aka the Federal Reserve, debt, and then our conclusion is, and you can make up your mind at that point. So let's get to it. So the first component we're going to review for a healthy, wealthy, robust economy is jobs. So where are the jobs numbers, or what are they looking like right now? Well, CNBC just posted this: jobless claims edge up to the highest since January. Planned layoffs soar. So the first thing I'm looking at there is, does that signs of a healthy economy? No. And the problem here is too that we have already a tight labor market. Look at the JOLT report that came in yesterday. And I posted this video, or I posted this in a video that I did yesterday. And you can see right here, jobs. This is the number of job openings there are. It's right here. The previous reading, so in April, there was almost 11.7 million job openings. The May report that just came in comes in at 11.25 million job openings. So if you're asking the same question as me, it's like, okay, there's a ton of job openings, but there's a bunch of people filing for unemployment claims and there's layoffs on the horizon. So shouldn't all those jobs funnel into those job openings? That's what you would think, but it's not happening. So let's move to the next piece of this puzzle. The infamous Fed. What is the Fed doing about a lot of this? Well, the reasons for a lot of the inflation that we saw in the past year or two, especially that we're seeing right now, is a combination of easy monetary policies by the Fed, basically making money free, and then you had the federal government just pumping out stimulus. So that combination equals inflation. It's in its basic terms. Well, what the Fed is doing to kind of combat this inflation is this. The Federal Reserve anticipates big rate increases later this month. So what the Fed's going to do is, they already said in the last meeting, they plan on raising rates again this month, 75 basis points, or 0.75%. That meeting is going to take place July, I forget exactly when, July 26th and 27th. One piece of the puzzle also that we got in this equation is Fed sees more restrictive policies as likely if inflation fails to come down, meaning they will continue to raise rates over and over and over again. And as we know with the Federal Reserve and the government and the markets in general, they always overshoot. In this case, it would be a catastrophic overshoot if they continue to do this. And then one big piece of this puzzle that I completely forgot about until I got home last night, and my daughter says, "Hey Dad, my student loans start back up in September." And I'm like, I completely forgot about it. Did you guys know that student loan payments are starting back up September 1st, 2022? They've been on hold, basically, or on pause since 2020. So about 2 years, student loan payments were not needed. Okay. So let's just think about this. Probably it's not uncommon for me to see on somebody's application $100,000, $200,000, $250,000 in student debt. I see it every day. So if you didn't have a payment on that student debt for the past 2 years, and now all of a sudden you have those payments starting, is that going to help or hurt people's pocketbooks just like gasoline's doing? Okay, so just think if you have $100,000 or $200,000 in student loan debt, and I'm not making this up, you can go to any report out there to see how much student debt there is. It's crazy, and that has to be the next bubble that bursts. But that being said, let's just say that the average student loan payments for a person in that area is $1,000 a month. Okay, so on top of gas prices, on top of food prices, on top of your rent going up and housing and everything in general, now you have your student loan debt coming back and resurfacing. What's that going to do to the average household income and budget? So if you add up these pieces of the equation, the job market, we're seeing unemployment rates going up and job layoffs being announced every day. You see the Fed and their national debt and inflation. Is there any relief in the horizon? Okay, even if there is, then you start adding student loan debt on top of it that's even going to increase people's budgets each month or put it to the range where the purse just breaks. Okay, so when you add all this up, it equals basically, in my mind, plus the GDP, plus the inverted yield curve. I didn't even mention those things. So when you add all this up, basically what's it telling us? Well, we're in a recession, or we're going to face a recession. So that's my conclusion for today. If you look at the job numbers, you look at what the Fed's doing, you look at interest rates, you look at inflation numbers, you look at student loan debt increasing, the consumer debt increasing, consumer disposable income dropping. It's not a good picture for our economy. It's not a good picture for our society, and it's not a good picture for real estate. Okay, so that's my conclusion for today in regards to the economy. So that being said, I'm still not a proponent of the market crashing. I basically think we're going to flatline because people still need housing and they're going to have to do something to do that. Either you're going to rent, and I saw a documentary last night, or not a documentary, actually a person that was speaking who buys real estate, who was an individual investor starting to buy and buy and buy. Now he has a company that he created. He's got $20 billion in real estate. He keeps buying up the markets because he's like, I can rent them out and I have control over my rents. Somebody's going to rent it. So with those equations out there, it's not a good picture for our economy. So now that the doomsday stuff is over, let's get over to where mortgage rates are starting for today. Maybe we have a little reprieve there. But before we do that, let's go over the economic calendar to figure out, is there anything today that should really throw us a curveball? So you go down through here, here's the economic calendar. Initial jobless claims came in higher than expected. Trade balances is okay. We went over that. Crude oil inventories, we'll check on that. Here's why I look at these specific things. What did we just go over? Well, we went over jobs. We went over energy, gasoline, inflation, high prices. That's their crude oil inventories. That's the pain you feel at the pump. How much in inventory do we have? Is it still continuing to be negative? Because if it is, that only means higher cost at the pump now and down the road. Other pieces of the puzzle you see down through here, we have federal people that sit on the Federal Reserve board. They're coming out and speaking later this afternoon. That always makes the hair on the back of my neck stand up. But based off all of that, where are we with mortgage rates today? Well, great question. Let's refresh this because I talked for a while and see where we're at. We're staying steady at a -8. So -8 shouldn't really do anything for mortgage rates today. As we saw, there's really no economic data that's coming out going forward, or we already know the jobs report, so there's no economic data out today that should really throw a curveball to the system here. So based on that, let's see where mortgage rates kind of are right now. Well, Mortgage News Daily, they take a little bit of time of posting their mortgage rates each day. This is actually where we closed last night. Now, I did a special blast last night, or a special event last night, to give you pre-warning that rates are going up, and they're going up pretty fast from yesterday's events. So let's go over the rates and what they're doing. You can see the chart here. This is rates by Mortgage News Daily. They post these every day. Here's where rates are. I said in yesterday's or last night's video, I said you're going to probably see rates go up 0.10 or at least an eighth, 0.125. And we basically saw that across the board other than these two areas. So hopefully you locked in your rates before you see this jump in rates, but these are where the rates are on the national average. Again, these are not any lender's rates, any particular mortgage company's rates. This is a survey done by Mortgage News Daily on a daily basis, giving you an idea on where the average rate is right now and the adjustment from the previous day. You can see down here the trend of the day is minimal. Basically, there's no more economic news coming out today that really should affect the markets. So that being said, I would just want to give you some great news on me and my team. It is official. We are now federally chartered. We can do anywhere in the entire country as well as Puerto Rico. So I'm still getting emails, hey Dan, you licensed yet in New York or New Jersey or this and that? We are everywhere, folks. We want to be your national mortgage advisor. So if you're moving from New York to Florida, New York to California, New York to Arizona, we can help you. You're moving from any state to any other state, we can help you. If you're a realtor out there and you're having tough time finding a lender or assistance, financial assistance for one of your buyers that might be moving to a different state that you don't have any control over, love to help you. The two biggest products that we have still remain our long extended rate lock for those out there that are looking to build. And then we also have a lock and shop for those out there that are looking for a house, but just can't find one just yet. You know, you can lock in today's rate to protect yourself against upward momentum in rates as we're seeing today. So that's my report for the day today. Don't forget to check out our live event tonight. I'll answer any questions that you guys have in regards to mortgages. And then we have a special guest. She's coming from Denver, Colorado to give us ideas. Is Denver still a hot market? Is it starting to cool off? What's it looking like out in Denver? If you're looking for that, please join us tonight at 7 o'clock. We'd love to have you. God bless, guys. Thanks for watching. I'll see you at 7 o'clock tonight. See you then. Bye-bye.